Hey everyone, welcome to SKC Financial Group, where we make retirement planning simple, confident, and built just for you. We have been hearing a lot lately in the news and from concerned investors. Is this another dot-com situation? And are we in an AI bubble? Well, let's look at it from a charts and numbers perspective. In 2025, just 10 giant companies, mostly the big names in tech and AI, now make up almost 40% of the entire S&P 500. That's the most concentrated the market has been in decades. And a lot of that excitement comes from the massive amounts of money these companies are pouring into artificial intelligence, building huge data centers, and buying the special chips needed to power the next wave of AI. It's an incredible boom, but it's also starting to feel familiar to anyone who remembers the dot-com days. Whenever the market gets this concentrated and excited about one big new thing, everyone starts asking, are we in another dot-com bubble? Back in the late 90s, the NASDAQ rocketed over 230% in just 17 months because people threw money at any company with .com in its name, even if most of them had no profits, no real business plan, and sometimes no sales at all. Prices went completely crazy, while actual earnings stayed flat. And we all know how that movie ended. So, yes, the headlines feel similar today. But once we look under the hood, the story starts to look very different. But here's where today feels completely different. The big companies driving this market are actually making more money than ever. And Wall Street expects their profits to keep climbing. We're not just riding a wave of hype like the dot-com days. We're seeing real earnings and real cash flow back up these higher stock prices. That doesn't mean the market can't get shaky or that everything's guaranteed to go straight up. But it does mean this run is built on a much stronger foundation than pure speculation. Even in the strongest markets, the headlines always find a way to make us feel nervous. And that's completely normal. Over the past 35 years, we've lived through recessions, wars, pandemics, debt ceilings, inflation scares. You name it, and every single time, the market has come back stronger. What looks scary in the moment has always turned out to be just another bump on a chart that keeps marching higher. History shows that staying calmly invested through the noise has been the winning move far more often than trying to jump in and out. Unlike the dot-com startups that were burning cash and praying for profits that never came, today's AI leaders, Microsoft, Nvidia, Meta, Amazon, are already the biggest, most profitable companies on the planet. They're generating mountains of real revenue and free cash flow, and they're plowing those actual dollars, not borrowed money or hype, into building the AI future. Even Fed Chair Jerome Powell pointed out that these companies actually have earnings, and their CEOs are on record calling AI the biggest technological shift since the Industrial Revolution itself. This time, the giants aren't betting the farm, they're using the farm's profits to build the next one. So, yes, parts of today's market feel exciting and even a little familiar. But when we look at the real earnings, the real cash flow, and the real staying power of the companies leading the way, this doesn't look like another dot-com bubble. It looks like the early chapters of something much bigger and much more solid. At SKC, we help our clients stay confidently invested through every headline cycle with strategies like our 5 bucket approach, so they never have to guess or panic their way through retirement. If you found this helpful, please hit that like button and subscribe so you never miss an update. And if you'd like us to take a look at your own plan, just reach out at skcfinancial.com or give us a call. We're here to help you retire with clarity and confidence.